let's pass it over to Dale and Dale because love having Dale Briscoe here. So there you go.
Yeah, the Dale and Dale show about to begin now. I'm now the host, so I've been promoted with you, Dale. Welcome back. Been 3, 4 months. I'm looking forward to having a conversation. How are you?
I'm very well, thank you, Dale. How's everybody over there?
All right.
Good,
We're,
Dale. Good to
yeah.
see you. Good to hear you. I'm gonna let you guys get to it. Thanks for being
Okay.
here.
Thanks, Blake.
So let's address the elephant, which is a symbol of Republicans. Red wave. And I do recall when we were setting up this interview, you said about the market, don't get in the way, but things could get interesting after the election. Do you
I did.
remember that?
I did. It's a long time ago, Dale, and usually I can't remember what I've had for breakfast by lunchtime, but I do remember that. Um, uh, I think that we are in for some very interesting times in the months ahead. We have had an extraordinarily good year for our portfolios. We've Just this month, we've crossed over 100% for the year. So we're just having a spectacular year. I mean, a lot of our bets have gone very well. We did get a little bit of volatility in and around Q3, and that's because we were positioning for obviously the election and the months after that. But it's been a spectacular year. But nothing much has changed in terms of the overall fundamentals. So if I share my
Not even in the minors, Dale. I mean,
Oh, the
I
minus.
know
Yeah, the
I
minus.
know you thought you were going to be in the minors for a very long time. Has this action surprised you to the
Yeah,
downside?
yeah. We actually took quite a bit of our mining exposure off last week. There were some key levels breached last week, so we took quite a few of the positions off.
Do you think
But
the trade is dead or we're just resetting?
oh no, I think it's just a reset. I think it's just
Okay.
a reset.
I agree. Yeah. Okay.
Let
Do
me
you
share
want to
my.
share anything on the screen,
Yes,
Dale? Or
yeah, I do.
okay. All right. Because right now we're just you and I are just black boxes.
Okay, can you see that?
Yes, got it.
Okay.
Okay, we're looking at the yields, a 10-year.
Yeah. So let's just take a step back and just reassess what's going on.
Okay.
Fundamentally, and don't forget, I think you remember my acronym of depth, DEPTH, and the E stands for Einstein, which is time is an illusion. So time is illusory. So time frames matter. And
Yes.
remember that we or I look at things slightly differently than you guys. I'm much more of a longer term guy in terms of what sorts of trends that we're looking for. So fundamentally, nothing has changed in the last few weeks or the last few months, right?
Okay.
The economy is doing great. Economy is doing fine. The economic indicators are all pointing higher. You've got inflation expectations trending higher. My favorite, obviously, is the very, very, very long-term CPI. And, that's going back, 60, 70 years. We're kind of now bottoming out again.
Okay. So we got wave 3 or C coming
Yep,
in
we've got another
inflation.
leg,
You
at
had it
least
labeled.
another leg higher in inflation. So average hourly
So I
earnings
mean,
again.
the mission accomplished with the Fed easing and going to half. Have you ever seen a time, being a trader and a market watcher, where the Fed would start an easing cycle and have the market back up in their face the way the market did here over the last month or so?
The reason that's happened, Dale, is because the market knows that the Fed are playing with fire. And I said this 3 months ago. I'm pretty sure I said this to you 3 months ago. This is a huge policy mistake by the Fed. And I don't care what all the economists are saying about, oh, the economy's slowing down, inflation's coming down, and the Fed, running rings, shouting, hallelujah, we've beaten inflation. It's complete nonsense. This is going to be seen in future years as a very, very bad mistake by the Fed. Okay.
It's like what happened in the 70s. We thought, different Fed chairmen thought they had beaten down inflation, and I think there were three separate um, waves
Yeah.
of inflation before
Yeah.
Volcker came in.
Yeah, exactly. And don't forget, I'm not talking about this week or this month or next quarter. I'm talking about over the coming years. I've said now for 4 years, and I'll continue to say it, we are in still the early innings of a generational bull market for inflation, which will take at least another decade to play out. Okay, so what does that mean? Okay, yields. We almost called the bottom of this wave foreign yields, but yields are going higher. If I had to put a number on it over the next 2 or 3 years, I'd say probably to about 6.5%. Same for the 10-year. Exactly the same story. In fact, the 10-year is an even prettier chart than the 30-year, right?
Yeah, look at where, yeah, really nice.
10 years even prettier. Once it takes out 5% on a decent closing basis, you're going to get exactly the same thing. You're going to get 6.5 to 7%, I think. You know, we had this counter trend trade on in TLT, if you remember.
Yeah.
We were long.
Are we going to new lows here for a third drive down there, Dale? I was just talking about that today.
I think we're going substantially lower.
So we take out the 80 low, or the 84 low. So can you see how it could be a 3? You've had 2 drives so far, and you could have a third.
Yeah, I can see how it could be 3 drives. I think we're going to take out 80 and TLT. Maybe again, not this
not tomorrow.
Not this month.
Not by the close today.
Yeah, exactly. I'm not trading it for 5 minutes. Not trading it for 5 chart. These are weekly charts. So I think you were talking also about yield curves. We called this back last year. We were calling this when we were still sort of 50 basis points inverted that we were going to go positive. It took a little bit longer than we anticipated, but we're on our way. And so we don't know yet whether this is a wave C or a wave 3, but it's going higher. And what does that mean for the man in the street? Well, what it means is the Fed are going to continue probably with their policy mistake and keep cutting rates, at least for the next few months. The bond market is going to say, well, that's absolute nonsense because inflation is not going anywhere. It's not really coming down. I heard Jeff Gundlach the other day talking, I think it was on CNBC, about, we might get a 1 handle on the inflation print in the next 6 months. Yeah, we might well do. But guess what? It's not going to stay there. It's probably going to go a lot higher. So the yield curve is probably going to continue to steepen, driven by the long end selling off and the Fed sort of doing their policy mistake on the short term.
Is that the danger zone? Not the inversion, but the steepening when risk is challenged?
Typically, yes. And that's because the bond market the long end stays where it is, but the short end comes lower because, aggressive Fed cuts, etc. What you're getting now is the Fed will be in a position, I think, that they will make maybe 1 or 2 more cuts, and then they'll have a little pause and have a little think about where things are going. And we're probably going to be Q1, Q2 of next year. But in the meantime, inflation's not going to go away. And then the Fed are going to be stuck because they will have started cutting rates. The long end's going to say that's nonsense. Inflation won't be going away. And then I think you're going to get, you may not get a disinversion again, but you may get a flattening where the short end has to play catch up with the long end. So typically what happens is when the curve reinverts, it's because the Fed are slashing rates so that the economy can recover. In this case, I think we're going to get some of that, but then they're going to have to backtrack. So this is what I think we're going to see. So in the short term, you could see the dollar slightly higher. Probably targeting maybe 107 to 110 on the Dixie. I do, however, think that we are going to get some kind of dollar sell-off during 2025, where we could get it back down to 100 or just below 100. But then longer term, I think the dollar goes a lot higher. And that's just a consequence of the fact that rates are going to have to go higher because of inflation.
Okay.
Having said that,
where does risk off fit into that
Yeah, well,
scenario with yields. I wanted to ask, basically yields have been shooting up, hasn't bothered the market.
no.
Dollar's been strong, hasn't bothered the market.
Yeah.
In 87, we had a lot of disintermediation where the market kept rallying while yields kept rising until the rubber band finally snapped.
Yeah.
Do you think that's where we're heading? Is the market fighting the high rates, the stronger dollar, and eventually those deflationary, I mean, at least contraction, or cause a liquidation break, liquidity crisis? Where is the danger point for you?
Look, I think you only have to look back over very, very long periods of time to notice that risk assets generally go up, especially over the last 20 odd years, right? And that's
Yeah,
partly due to Fed profligacy with QE, which has been in many cases unneeded or unnecessary. And that's just a political decision by the Fed. So risk assets, I think, are actually going to do just fine,
well,
at least in the
okay,
short term, because the economy's fine. The economy's fine. Companies are doing fine. Jobs are fine. Inflation is high. Companies can raise their prices. Profitability is okay. So I think, risk on is still the way to go. I think you
okay,
cannot stand in the way of risk assets right now, especially as the Fed are now cutting rates, which is completely unnecessary, in my opinion. And you look at another risk off measure, right? So what direction do you think this is going on? This is risk on. This is
yeah,
TLT against
junk,
junk. TLT
yeah,
against junk. When people are
yeah,
running to risky assets,
junk,
yeah,
yeah,
it's risk off. Here's the VIX. We had a really lovely trade on this back in August when we had that spike. We had that spike right there. When was that?
yeah,
Early August. Yeah,
August,
yeah, and we
yeah,
called it. We actually called
before
it.
the opening.
Yeah, 5th of August. We called it. We said, look for.
What instrument were you in? Because it was the VIX, a lot of the VIX products were dysfunctional that day.
No. So you can, if you're an options trader, you can sell vol in general across the board. But our strategy is, it's in real
Oh,
assets. So we buy risk assets. So that was the key for us to,
I
step
see.
into real assets. And you
Okay,
can look at, any one of a number of ETFs that suggest the same thing. Everything is headed higher, right? This is the momentum ETF. This is the broker dealer ETF. Everything, nothing, as I said last time I was on 3 months ago, nothing in the markets that I'm looking at right now or have looked at this year is suggestive of anything other than investors still wanting to take risk and for markets to move higher.
I see you have a semi-SPY ratio.
Yeah.
Semis have been real weak. They haven't participated.
Yeah.
So,
These two charts here. So this is the Nasdaq against the Russell. This is something that we called a couple of years ago, this rally in tech versus a sell-off in small caps. Small caps obviously were going to do less well because interest rates were going high when the Fed was in its tightening mode. Now we're kind of at the point where if the Fed is cutting again, small caps may well have a day or two in the sun. So
okay,
we could well see over coming months Russell outperforming Nasdaq.
yes,
That's
got it.
potentially going to happen. Does that mean that it's it's done? I.e., we've seen the lows in the small caps relative to the Nasdaq? I don't know. It might be the case, but we're just going to have to see how it plays out over the next months and quarters. And then the
Okay,
other thing that I was going to look at for you is the semis, which you pointed out. Now, for me, we're kind of at an inflection point right here. So this is why I think it's going to be interesting over the next few months. Semis relative to other things that have done extraordinarily well over the last 18 months, 2
they're
years.
cheap right now. Is that what
Well,
you're going to say? Relatively.
I'm not going to say they're cheap. I don't think they're cheap.
Yeah, I don't
What I
either.
will say is that semis are probably still going to be the place that you ultimately want to be longer term, right? So whether we get, another 10% lower in semis from here. Who knows? You know, I don't have a crystal ball over the next, few days or few weeks. What I will say is that over the long term, I think it's going, still higher relative to the market, right? Probably another 20%, 30% higher relative to the market. So you have to sort of use your ammunition wisely in terms of what you're doing. If the time to sort of take profits was, back in the summer, and that's why we had, we're up over 100% for the year, unleveraged and with no options. We had a tough Q3. We gave money back in Q3, but we've been saved in Q4. Why? Because we've been coming back to the trades that we believe in, which is commodities are probably going a lot higher longer term. I don't think there's any doubt in my mind about that. So this is uranium, for instance. I think we've seen a bottom, so we're long some uranium miners. They've done really well. I think the last time we were on, I spoke about this trade, which was the China trade, right? We spoke about this. It was the time. This line here. I think this vertical line was when we were on. And I said to you, we like China.
Yeah.
And we had that massive pop.
Yeah.
We had a 60% pop.
Yeah.
We're out of that now.
Were you happy that day?
Oh, yeah. Well, for there was a few weeks where we didn't know what was going on. We were tempted to take profits, but we couldn't take our money off the table. It was just like too good to be true. Anyway, my favorite trade, as I mentioned to you before, and I'm not a massive Bitcoin fan. I don't fully understand all the use cases for Bitcoin.
You just get the charts.
It's a risk asset. It's a risk asset. That's all it is. So my target for Bitcoin over the next few months is probably about 110,000, and then I think we might get a decent correction. So
there are some people saying this is 5.
Yeah, this could well be wave 5 of some degree, and then you could get the thing with Bitcoin is you get huge corrections. I mean, it's not a 10-20% correction. It's typically 50%, 50% plus. So you don't want to be on the wrong side of that. But as it's a risk asset and the Fed are goosing the markets again, you can't stand in the way of it. And we've made a ton of money on some of the mining stocks like Coinbase, MicroStrategy. I mean, we've just had a field day in the last 2-3 months.
I bet you're looking at natural gas issues. Micro.
We are actually. It's very interesting you should say that. I'll come on to that in a second if you don't mind.
Okay.
So these are some of the things that I'm looking at now for the months and quarters ahead.
Well, XLY is a discretionary
consumer
stuff?
Discretionary, right? Exactly.
Okay.
So consumer discretionary, basically stocks like Amazon, Tesla, and Home Depot. This to me looks like a classic wave 4, and we're going to be headed higher. Just bear in mind the time frames again. I'm going to say I can't emphasize that enough. This is not a 5-minute chart. This is a monthly chart. So, and again, this is relative to the SPY. So I'm thinking that consumer discretionary stocks are going to significantly outperform the market over the next 3 to 5 years. So if you want to look at things like Amazon, Home Depot, Tesla, now is the time to try and look at it.
You don't think Trump will give Bezos a hard time? You
Honestly,
didn't think of that, did you?
I don't really care what Trump thinks or says, to be honest. Trump doesn't control the stock market. Stock market's way bigger than that. This is the SMH. So this comes back to your point, Dale, about semis being weak. And yes, they have. And could they have another 5%, 10% correction? Yes, they could. But I still believe that semis longer term are going to outperform the market. What's going to underperform? Well, this is something that we've been on the back of for the last few years, which is solar stocks. We've been short solar. We continue to be short solar. The whole solar and the EVs a little bit as well to some degree have been way overhyped.
How about windmill? You have any windmill shorts? Are you like Don Quixote? Out there on your horse, Dale,
we
fighting the
we
windmills.
we do trade in and out of alternative energy stocks, and we have had some decent shorts in the wind space. We
Okay.
don't have any positions on right now, to be
All
honest.
right. All right. So
But
how about okay, so you were going to go to
yeah,
oh, go
I'm
ahead.
gonna come on to a few other things. So
All right.
these are some of our relative favorites, right? So this is uranium against solar. I think it's a no-brainer right now. So nuclear stocks,
Yeah.
uranium miners, CCJ, NXE, those sorts of stocks against short the solar stocks. This is consumer discretionary against utilities. Okay. Utilities are going to struggle because inflation is not going to go
Yields.
away over the next few years. So rates are going to go higher. Utilities are going to underperform relative to other things in the market. Same thing with real estate. It's going to underperform relative to consumer discretionary.
Just asking.
These are communications. This is the communication sector. So we've been long stocks like Meta and Google, and we continue to like those stocks against real estate, for
What do you
instance.
think of Apple?
Yeah, I'm struggling to be positive on Apple, to be honest. Apple and Microsoft, I think, are gonna relatively underperform. So I'm neutral on Apple right now. I think,
Yeah.
look, I have an iPhone. I've had an iPhone for donkey's years. And I think Apple is a good company, but they haven't really innovated anything for a very long time. Apple is not the stock that it was 20 years ago, put it that way.
Yeah. I don't think Tim Cook is in the club either.
No.
The Elon Club.
So these are basically XLC and XLK, which is communication sector and obviously tech sector against biotechs. We've actually made decent money on biotechs this year, but we're now pretty much out of all of those trades. Now this is going to interest you, Dale, and probably Stelios and a few others. This is XLE against GDX. So one of the reasons why we've gotten out of a lot of our gold mining and silver mining stocks, and we've heavily cut back exposure. We still have some. We've probably got 5 or 6. As you probably remember, we run a very diversified book. That's the D in depth. So we still have a few positions, but we've cut back a lot of them. This is basically energy against gold miners. To me, this looks like energy is going to significantly outperform. Now, whether that's oil stocks or whether that's gas stocks, we haven't really done a lot of digging yet. We're kind of early.
LNG.
Yeah, we're in the early stages of looking at this trade.
Okay.
But I do believe that it's got substantial upside over the next few years. So whether that's deterioration in the picture in the Middle East and
It will be.
God forbid, another oil price spike. I don't know. I don't have a crystal ball. But this looks like a decent trade to me.
Okay.
But I'll just finish
I
off by
like the
saying,
look too.
yeah, I just like to finish off by saying you cannot short the market. Look, we're going to have a correction at some point, no doubt. If I go back to,
Well, we're in 5, right?
yeah, we are in a 5 of some degree, but I still think that, look, this is
I know.
this is
Yeah.
very, very, very long term. You can't fight this. This is especially not when you've got a central bank that's pumping liquidity into the system. And
Well, do you think that he is really Paul is really unhampered. He's not seeking reappointment. Trump can't get rid of him, and he can really he doesn't have to have an audience to please right now. So he's made a terrible mistake. If you're right, and he may have to tighten again. Do you think he'll care?
no, you won't.
Who he leaves a problem with? You
Well,
think he'd rather?
you've hit the nail on the head, Dale. That's absolutely the nail on the head. And the problem that I have with politicians and central bankers, so politicians of any shape and size and variety and color,
Yeah, I know what you mean.
I dislike them all
I know what
because
you
they
mean.
don't take responsibility. And what I see right now is a huge policy mistake in action, which will play out over coming years. And the people that are perpetrating it now will not be around to
Yeah.
carry the can when it all goes horribly wrong. Now, when does that happen? I don't know. It might not happen during my lifetime. This might go on, I'm like you, I'm pretty long in the tooth now. So, this could go on for another 20, 30, 40 years. I don't know.
Uh,
All I do
yeah.
know is my view on inflation is that inflation is going to be much, much higher over the next 10,
That's your
20
highest
years.
conviction idea,
That's
isn't it?
been my highest conviction idea for the last
For
four
a
years
while.
and
Yeah.
continues to be, which
Yeah.
means that if that's right and it continues to play out that way over the next decade plus, we could have these markets going sky high because inflation just takes off and people need a hedge against inflation. And guess what? Any risk asset is probably going to be, something that people want to throw money at because they won't be able to keep up. And honestly, Dale, what really annoys me is that the wealthy, and obviously I would probably classify myself in that bracket given what I've done for my career. um, the wealthy are fine, but it's the guy in the street that's going to suffer, and that really upsets me. So anyway, I don't
All
want to
right.
get technical
Let
or
me, does this bother you at all, Dale? And I know the technical, you can't argue with the technicals, okay? I mean, only God knows where the top is, right?
yep.
But U.S. households have never been longer equities, and baby boomers have 74% of their net worth in the market right now. So I mean, it's not a contrarian trade. It's not it's not a young bull market. I say it started in August of '82
Well, it's
at
been
7.6. It's like 43 years old.
well, it goes back even further than that, doesn't it? I mean,
Oh well,
it's been a
yeah.
bull market for 100 years nearly.
I guess you could say that, but in our modern era, I remember '82. And that was when Volcker was finally able to take his foot off the brakes. A couple years later, the market came out of the hole in
Yeah,
'82.
yeah.
So, I mean, everyone's in. Everyone's in the
Uh,
pool, aren't they?
it doesn't matter if everybody's in.
Doesn't matter.
If money keeps getting thrown at the system by
Yeah.
the central
Okay.
bank, every time a minor hiccup occurs, they go and double the size of the balance sheet or triple the size of the balance sheet and throw trillions and trillions of dollars at the market.
Well, maybe Paul gets religion in his last year as Fed chairman, and he starts thinking about his legacy. And besides not, maybe he doesn't continue to ease. Maybe the
Well,
next step is on hold.
see, I think Powell's thinking about it incorrectly. He's worried that the guy in the street is going to be mad at him if jobs are lost, right? So
Yeah.
that's why he's cutting rates. But he's forgetting the fact that the real elephant in the room is right now and hasn't been for a long while. It's not jobs. The economy is doing just fine.
Yeah, it's a wealth disparity. Do
It,
you
it
remember do you
Well disparity.
remember do you remember a guy, Dale, uh wrote a book a long time ago, Ravi Batra, The
Yes.
Depression of 1990. I knew you'd remember that book. And that was his argument. And that was back then. I mean, that must have been written in the 80s or something. Um, and he was talking about wealth distribution. And anytime it really got to an extreme, it led to a depression. I don't think we've ever been more extreme, have we?
Well, obviously the 20s. I
Oh
think,
yeah, robber barons.
yeah,
Yeah,
I think, look, my view on this, and I don't want to get political, and I don't have any dog in this particular fight. What I will say, and I've said it now for probably at least a decade, is that the inequality that we see in our world between the haves and the have-nots is getting worse year
yeah,
by year. And at
yeah.
some point, that particular rubber band will snap. And so I do believe that within the next 30 years, maybe within my lifetime, that we may well have a civil war, right?
Okay.
Between the haves and the have-nots. The have-nots
Yeah.
are going to say we've had enough.
Okay. Let them eat cake.
But Powell doesn't care about that because his time
No.
frame is the next 1 or 2 years, right? He doesn't
Yeah,
care what's
year.
going to happen in 20 years. And he wants his legacy to be, I don't want there to be a recession on my watch. So I'm going to slash rates, which is complete rubbish because the biggest problem in the years ahead is going to be inflation.
Okay. All right. Can we wrap it with where
Yeah.
you think the miners are going to reset to? I mean, in GDX, this 36 level was a breakout in GDX that it's pulled right back to.
Here's a
So,
cocoa trade for you.
oh, okay. Cocoa.
Yeah. And there's
Yeah.
a coffee trade for you.
They're
GDX.
all turning. Are the grains turning too?
No,
Beans?
not
No?
yet.
Okay.
No, no.
All right. Let me
So
know.
yeah. GDX GDX has gone from something that we were very bullish about to something which we are now, I would say, neutral or less bullish on.
Yeah.
I think because of the view on inflation, I still believe over the next few years they're going a lot higher. I just think
Will
that
silver
right
outperform?
now, in
Gold
terms,
silver ratio? I know I've kept you here quite a while today. Okay.
uh,
Yeah, it's just
it's it's
sideways.
it's just sideways.
Yeah.
It's just sideways. I don't think you can say anything about that. What you could say potentially is that move from 2020 to 2021, that was an impulsive move. So that was silver
Yeah.
outperforming, and all we've done since then is a bunch of sideways nonsense. So
Looks
if
like
that,
the dollar chart.
yeah,
A
could well
lot
be.
like the dollar chart.
You could say something like this, right? You could say all we've seen over the last
Yeah.
few years is just a
And if it's
sideways
like
little
the dollar,
triangle.
it'll break. Yeah, I like that. It's
So
nice.
that's probably what I would say in terms of silver relative to gold is that ultimately over the next, this is like going out into 2026, is that
Yeah,
silver is likely to
I
outperform.
agree. I agree. What a great interview, Dale. Really
Uh,
appreciate you coming in here and,
you're
you know,
welcome, Dale. You're welcome.
sharing your macro stuff with us. Because, macro is really a road map for people. And if you get the roadmap right, then it's easier to be tactical, isn't it?
Yeah, well, as you probably remember, my investment strategy, which I've been running for many, many years now, and which is probably why we've been so successful this year in particular. Um, I used to call it techniquantamental, which is a bit of a
Yeah,
which is a bit of a mouthful, but now I call it fun quantec, which is much easier
okay.
to say. Fun
Yeah,
being fundamental, but obviously it's because it's fun, right?
yeah,
And the quant because we use a lot of quant screens, and tech because technical analysis, this is what we do at the end of the day.
yeah.
But the time frame in which we do it and we make our profits is much shorter than the time frame with which we look at the world. And you have to do that. You have to look at the bigger picture, in my opinion, anyway. Everybody has their own way of doing things, but for me, what's worked best over many years, over 35 years, is taking a top-down view, a longer-term view, not getting caught up in the shorter-term noise, and just sticking with your convictions. Obviously, set risk levels and stop levels. That's essential, but stay with your view and don't get shaken out of trades just because of what happens in the next 5 minutes.
Great advice from someone who's been there, who learned from his mistakes, and I guarantee you, Dale made them before he had his breakthroughs, and now trying to help comes here to help you avoid the landmines that a lot of people, that traders step on, and give you some nice guidelines on markets. You've made it hard for me to want to look to for a top in the S&Ps around 6,100 to 6,200, which is a number I've been looking for a long time. I'll still try it.
Look, Dale, I think it's fine to do that. It doesn't work for me just because of how we manage portfolios and how we run risk. And the hedge fund clients that we have tend to want us to look at things on a slightly longer term basis. But I do think there is a correction coming for sure. And it could well be in that sort of 6,000 to 6,500 space. So I wouldn't be going long here, put it that way. If you're a long-term investor, you've been long for a long time, right? So take some money off the table, have some cash, in the bank ready to put to work if you do get some kind of decent, shakeout. But everything in the market right now, whether it's volatility, whether it's the VIX, whether it's TLT junk, whatever sort of risk on, risk off measures that you look at, nothing is suggesting to me at the moment that we're headed for a big fall anytime soon. But I don't have a crystal ball. Something could
but that's what maybe it'll take a do you think, Dale, and this will, I promise this will be the last question, that tariffs didn't work that well in the 30s. It deepened the problems that were already going on. Do you see it rhyming? Why would tariffs be great now?
Look, I don't believe in tariffs.
It's a tax.
It's a tax, it's inflationary, and that's the last thing that you want to be throwing into the mix at this point in time. So I think that's a huge mistake.
All right, well, there you go. That could be the shift. So
it could be.
It could be. Anyway, Dale, it's always a great shift in overdrive to talk markets with you. All right,
my pleasure, really
appreciate it, buddy. I'll get a hold of you through email, and we'll set something up and talk next year and see what the brave new world looks like. Appreciate your giving spirit. Dale has no axe to grind. He's not selling you anything.
I'm not selling anything. This is all what the hedge fund, the big hedge. Yeah, this is what the big hedge funds pay us the big bucks for, and you guys can have it for free because I believe, like you guys do, that the community is better off if you share.
All right, there you go. So you reap what you sow. Plant good seeds. And Dale, thank you so much for being here, and have a great fourth quarter, and we'll talk early next year.
You're welcome, Dale. Say hi to everybody for me, and we'll catch you in the new year.
Okay, my trading warrior brother, Dale Briscoe, everyone. So you're going to want to watch this again. All right. Remember, everyone, don't just count your pips, count your blessings. Dale, everyone's thanking you, and they appreciate the time that you spent with us here today. So see all the comments? Very good. All right. All right. Well, that's a wrap for me, and we'll see everyone for TGIF. You guys have a great day, and that's it. Good hunting. Adios, everybody.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.